What's up everybody? Tom here with another video. In today's video, we'll be talking about why this chart is the most important for us to be looking at right now together. We'll also be talking about our technical analysis levels for the Sp500, Nasdaq, Bitcoin, Tesla, and more. The sleeping giant, once called the biggest hedge against the stock market, has awoken, gold. But does this mean that it's going to go on another epic run? Stay tuned to find out more. All right, well, as we like to do on this channel, let's have a quick look at what's going on in the markets right now. And yesterday, whoa, was this a green or what in terms of the technology companies? Actually, surprisingly, look at AMD. Look at this, 5.68% out of AMD coming off the back of a pretty bad start to the week. We also have the FANG, Microsoft, Apple, Google, Amazon, Netflix, all those ones going very, very well. Tesla recovered after some weakness through the session, and quite a few others did quite well. Healthcare sector as well was moving through the sessions. When we take a look at the major market indices, you'll see why. Nasdaq out in the lead, recovering after the bot scandal 2.0, which happened on the previous session. Look, I will just quickly put my comment in here about bots. Bots and algorithms are very common in the trading markets. Last year, they became incredibly prevalent. They're everywhere, and it has led to more swing trading and options trading being the way to go. And a lot of it's got to do with these flash crashes and flash moves that occur, which can take out CFD or contract for difference stop losses. So always be careful about that. But bots are here to stay, at least for now. I just wish they'd go away because, I mean, I'd be very interested to see what you guys think down below. Let me know what you think about the algos and bots in the market. Should they be banned or at least restricted from what they can do? I tend to think so, but I'd be interested to know what the community thinks on this. S&P 500 up 1.11%, Dow Jones 0.9%, and Russell 2000 0.43%. Where it gets more interesting is probably here, where we start talking about the sectors. The two supposed value sectors were down, and everything was all about technology again and healthcare. Good work, XLV. Healthcare's coming good at the right time. So love to see some XLV. You guys know that I like that in the medium term bull run cycle. So I really like it from that medium to later stage cycle. And if we believe we're in a new cycle right now, then you're willing to hold it for a long period. Healthcare has always been one that's done quite well over time. Of course, make your own decisions before selecting anything. Put call ratio, not much to say here. Basically 0.767 just means that there is a decent amount of calls being opened right now against puts. What we really want to see is everything to go towards the call side. Remember, we need days underneath the 0.7. I want to see 0.6s and lots of 0.6s, and we're hitting the resistances, etc., on the charts, because if we're doing that, it's an early warning sign that we should be considering hedging or considering taking some profit off the table. At this stage, PCC remains up here, which means things stay bullish for now at least. Let's go over to the dollar index. Dollar index is finding some strength here and is recovering. Now, dollar index didn't quite hit this 91.40 zone yet, so I still think there's some weakness going through here. Maybe it comes back to the 20 moving average on the 4 hour, something that held it down previously, and then it sells off this zone, or maybe it goes up to the 92. Either way, this is actually one of the charts that I now have to become laser focused on, because yesterday gold broke above 1760, a level we've been talking about. The double bottom is technically in play. We saw some massive, amazing movements here off the 20. We actually had some really great price action in the smaller time frames. Let me go down the 2 hour and show you guys. Check this out. So we had our lightning bolt. We had resistance, resistance, resistance being broken out. It's actually a very good little day trade here. Trough, peak, higher trough, and then the breakout occurs. This actually is always going to smash the previous one because of the way and the sequence that it came into it. Very nice trading there. It's got above 1760, and now it probably comes down, tries to find some support here. And if it continues with those bullish pressures and gets a new high, I think the double bottom is going to come in. It seems very likely that this pattern will play out. Now, what's this pattern predicting? This pattern predicts quite a lot for gold. In fact, it's predicting somewhere around this type of move. So about 1830, all this previous support becoming resistance there. Gold is a sleeper hit. It's been very unpopular for some time. I think there's a lot of things and a lot of sequences that are occurring here that make it a lot more interesting. And remember, when everybody's not thinking about investing in a certain instrument and you know it's a quality instrument over time, sometimes that's when you want to strike like a tiger and you want to start looking at the technical base formations and things that are pointing to you, hey, this is going to change. And when I get in, I need to be in before the mass media and everyone else gets in. Just like value stocks in November last year, just like the FANG a few weeks ago. No one was talking about it. Now everyone's talking about it, and you only get a little bit of the percentage rather than a lot more of the percentage. Here's the trend line that curved through it. Lower high, lower high, lower high, lower high, broke out, consolidated above, and now, of course, it's above the 50 moving average on the daily. Exciting stuff there for gold, which leads to exciting stuff for silver. Silver also, trough, peak, high peak, now breakout. We can see here the sequence. This closure above the 50 is significant. It could push silver back up into here. Congratulations to a few people in the room. I've seen some people stacking bullion recently in there, which has been pretty funny and pretty amazing pictures coming through from everyone. I wish I had that much bullion. It's pretty cool. $28 is the next kind of target that we're looking for. And yeah, I think that once you get through this peak up here, 28 becomes the next level. Things are looking good, but it is going to be really talking about dollar index. I feel like today is going to be a slightly weak day here for the metals because they had such an amazing one yesterday, but next week should set the tone. And as long as dollar index continues to hover or weaken, both silver and gold should come through. Let's have a look now. Bitcoin, the 20 moving average on the 4-hour, guys. Look at it hold. And this is a great sign. Closure here. Very cool sign. Let's go into the smaller time frames. You guys know I like the 2-hour, the 4-hour, the 8-hour, and the daily. What did we get? We got a 2-hour confirmation above the closes previously. We're now hovering around this zone. We've got the nasty long leg doji. Now, notice about the long leg doji. No closure underneath, right on the bottom of the leg. Very important. Now, little closure above here. We'll go back into the 65K highs, and then hopefully we can confirm further. This is a good little base pattern formation for Bitcoin. I like it set out for the weekend, and it tends to trade very well into the weekend as well. Bitcoin is that market that opens and never goes to sleep. And during weekends, it tends to have a lot of runs on it, especially altcoins. Everyone goes, well, I can't do anything else. I want to trade. And where am I going to go? I'm going to go to the crypto market, baby. That's where I'm going to go. That's what everyone does. Tesla, we've been getting this one very correct here on the channel as a community. It's been amazing. Look at the 720, guys. Wow, wow, wow. What a zone. 720, we were correct. The zone did hold up. So the previous resistances, we were smelling it out. We knew that this was the important level, and it looks like the market bounced off that zone yesterday. It's gone up to 738, which makes sense because there's some 740 resistance over here, even though it's quite minimal. And once we clear 740, if we do that through the session tomorrow, let's say it pulls back a little bit, we should continue our run up to 780, 800. Why is that? I don't think it has anything to do with much other than earnings is coming. Now, Tesla likes to run into hype and anticipation. Who trades Tesla? Predominantly retail traders. What do retail traders do? They like to buy the rumor. They love the hype. The YouTube churns out. The Reddit churns out. Everything else is like, yes, we love the stock. We're going to buy it. We're going to get into it. That's what people are saying out there. And that tends to have this kind of euphoric event into earnings, into other big announcements on stocks like this. At least that's the way it's traded in the past. So holding at 720 yesterday is a big deal. I would love to see a little lightning bolt here now on maybe a 1 hour, something like this. And then we can move up to the 780. And of course, 800 remains the major resistance point for Tesla, at least in the shorter term. After that, 880. So if you get through 800, it's very cool. 800 into 840 into 880. Tesla's looking not bad on the charts. I'm very happy with the hold at 720 yesterday, though. That was great. IWM, the Russell 2000, the smaller cap companies. If you're not aware of what this index is, you should always check it out. It's very important if you trade smaller companies. It's still looking okay. It closed above the other day. This was our close that we wanted. That led to me thinking that we were going to have another bullish day. We did, but of course it opened up and then came down, tested the 20 moving average. I think that we should be starting to put some pressure on this today as long as the rest of the markets hold up. 226, what is this, 40-ish zone would be a great point to close on. I would love a 227 actually on the weekly. So if we close at 227 during Friday's session, that'd be great. Then we can move towards the 229, 230 and the 234. Look, Russell 2000, nothing wrong with checking out this chart. These little bits of wick rejections show strength. And even yesterday, there was a little bit of a rally coming through. So as long as the broader market holds, being the Nasdaq and the S&P, the Russell could be okay. It is heavily dictated to, though, by, of course, the Nasdaq and the S&P. If these ones don't perform or don't at least hold steady, it's very hard for the Russell to go up without them. So what happened on the Nasdaq yesterday? Well, we thought 14,000 would be the profit kind of level for the day trading, and actually pushed a bit higher. It actually went all the way up to about 1451, which is good. We still have our targets here set to around that 14.4 through the earnings cycle. We'll see whether that inverse head and shoulders back from over here continues to play out so strongly, but it's all going to be about earnings next week. Will Wall Street take profit on Friday and then say, well, we want to find out more about earnings first? I don't know that answer. Will crazy robots come in and start pumping and dumping all over the place? We don't know that either. All we know is that at this stage, there is nothing bearish about this chart other than indicators, which are going to be telling you bear signals everywhere. I don't like indicators when the trend, the price action, is telling us to look at the long. Don't look at the indicators very often. It's going to hurt your mental state. So I think the big thing here is that we've hit the resistance. Of course, a closure above this will be bullish. We can then move towards the 14.2 level. A movement down here, it could be coiling around these previous highs. Remember, we just hit 14,000. So a movement down to 13.8, and then for it to do something like this would be actually not that bad. I got no problem with that. Of course, most people probably want it here tomorrow, but realistically, a little bit of coiling wouldn't be bad. And the main reason is always going to be to try to get this daily 20 up around the chart. Daily 20 is what it usually bounces off. See? Daily 20, daily 20, daily 20, daily 20, all over here. Therefore, we need it to catch up with price, and that's why I believe it's coiling. Coiling strong, there's nothing wrong with that on the charts. Speaking of strong, SPX, the Sp500, SPY, whatever you want to call it, here it is. Here's the community trend line, and we're breaching the trend line right now, which is not unusual. We kind of breached it a little bit before. Now, if it continues this nice little movement up towards 4,200, that's cool. If it breaks through it, look, it's a trend line for a reason. You don't have to just instantly say, oh, I'm going to trade it short. We've been talking about this line a lot on the channel, and that's because it is important. But again, we want a sequence to show us weakness back to the 20. We are not going to blindly sell it up here because there is way too much bullishness and you're into earnings season. So you would have to be predicting against earnings and against the companies being able to meet the expectations of the market for you to sell this. Remember that earnings season and shorting doesn't always work out unless they all start missing. If they all start missing, all right, here comes 20 land. So look, S&P 500, we're laser focused on this chart, guys, together. We will continue looking at it, but at this stage, I don't see much bearish action. It just looks bullish, and it's right on the trend line, and it could continue to melt or grind higher. So that'll wrap up this video, guys. Remember to join the public Discord community in the links down below. If you want to join the private one, you can do so either through YouTube or, of course, through our website, fxevolution.com. And as always, please remember to subscribe, hit that like button if you enjoyed what you saw, and we'll see you live for New York Open stock market, crypto, stocks, commodities. We're going crazy. We're going to be covering it all, and that will be 1.5 hours before the New York Open. See you there. Bye for now.